So the end of summer is officially here almost, and let's get that last summer party in before closing up the grill, taking down some umbrellas, putting away chairs. In fact, if you're watching this right now, I'm doing just that, mostly because of a hurricane that's coming, not the end of summer. So as I prep for storms, let's both of us prep for the seasonal change on the calendar. Hey folks, Tom Gentile here. You know, Mark Twain once said that September is the toughest month to be a speculator in the stock market, followed by every other month. He wasn't a good trader, but at least he had a day job. As we end another summer, as well as another earnings season, the mainstream narrative is going to change a bit. Other than First Friday, which is when we get the unemployment data for the month, a big date to watch is Wednesday, September 20th, when the FOMC will meet to determine the future of interest rates and, of course, whether to cut, pause, or raise short-term rates. But what about the rest of the month? Well, it's going to be filled with a who's who of meetings, earnings outlooks, and more. But I want to fill it with seasonal probabilities in the stock market. So the calendar is what I'm going to be looking at. And this calendar I have right now is called the money calendar. This is a calendar that has the best entry and exit dates on the best stocks to be bullish and bearish on. And it uses a minimum of 10 years to find these hidden gems. Now, upon first glance, it looks like a calendar, but it does have three distinct colors, from green to red. Of course, yellow in the middle on its day dates. Green days are when there are more bulls than bears, and vice versa for the red. September looks like any calendar, but it looks like it's bleeding with autumn colors. So let's look beyond the month and look at some opportunities as we head right out of Labor Day into September. Now, I'm going to focus on the bulls for today. So the chart you're looking at right now is showing the top bullish stocks that start on today, which is right after Labor Day. So we're talking about bulls. We're talking about things like Southwest Airlines is on here, Dick's Sporting Goods, Boeing, Marriott, Ross Stores, MGM, and PNC Bank. Rounds out most of the list that I just talked about. Now, if you look at each of the details, you'll see each symbol has a green bar beside it. That represents the number of trading days that are in the bullish pattern. So for instance, if you take a look at LUV at the top, it has 23 days, but then look at MGM. MGM only has 5 days on the pattern. So let's continue on to find out some more details on Marriott. So looking at the chart of Marriott, it tells me right now, if this were a seasonal company and I were to guess that it is, I mean, think about this. It's coming off a very promising summer of revenues. A lot of hotels are in the same situation as well. But the data is what I'm interested in, and it speaks for itself. I can verify all this information above that we just talked about. I can check profits. I can check accuracy. I can also get into details like the worst that MAR has performed in the last 10 years, which during this pattern was $4.86 against us. But it also bested, and that was $11.55. That was the maximum profit that it had during the same 2-week pattern. Now, let's get into even more details by looking at this. Now, these are two different charts. Each one's a bit different. The first one is yearly trade results, and the second is last year. So when I look at the yearly trade results, I can see immediately how it performed. I can also see that last loser was in 2016. Since then, it's been nothing but gains. Also, notice how the gains get better each year on average. The right-hand chart shows you Marriott's stock price from the beginning of the pattern, which was the 2nd of September, all the way out to the 15th of September, which was the end of the pattern of last year. As you can see, that stock went up that year too. So where's Marriott projected to go, and when is it projected to get there? Both of these questions I've already answered. I give you an average move to the upside, which right now in the last 4 years is about $5, and the average time that it gets there, about 2 weeks. So we're doing what everybody else is not. We're getting this information like a scouting report. Everybody else is thinking the stock's going to go up. My way is more objective. The data is right there for all of us to see. So if we're going to look at a chart of Marriott, take a look at this chart. This really seals the deal. The channels seem to agree with the seasonal outlook. Everything points to higher highs. As a stock trader, if you agree with the analysis I just showed you, then you simply buy the stock on the start date and you sell it on the end date. What if you're an option trader? All right, take a look at this. For an option trader, it's slightly more work. We're going to need to find a near money option with an expiration date that is just past the ending date of the money calendar pattern. So for this example, we're looking at the Sep 15, 2023 calls. The 200 calls are near the money. Now they're trading for $5.70 as of this video, or $570 per contract. Now, if MAR were to move up 5 points as it did in the last few years during this time frame, these calls will be worth a minimum of 50% more than they are right now. And again, folks, it's past performance, so no guarantees. And it's not just bullish patterns that the money calendar tracks. It can spot bearish patterns as well. I mean, remember that calendar? It was mostly red for September. So later this week in our podcast with CJ, I'm going to be looking at the same calendar, but I'm going to be spotting bearish patterns. Hope to see you then.